In market news now, global stocks are lower as U.S. debt ceiling negotiations drag on without resolution, stoking a general unease in the markets that saw safe haven assets such as the dollar and gold hold near recent highs. Locally, food producer RFG saw interim profit jump more than one-third despite selling lower volumes as high inflation and rate hikes ate into disposable income of consumers. The company, valued at 2.2 billion rand on the JSE, reported that profit increased 36.7% year-on-year after group revenue improved by 10.2% to 3.8 billion rand, driven partly by price inflation of 14.8%. Meanwhile, packaging group Nampak suffered a 2.4 billion rand loss in the interim period to March, while its net debt rose 23% to almost 6 billion rand, raising questions about the revised 1 billion rand rights offer proposal, if it will be sufficient to repair its balance sheet. To talk to us about the latest when it comes to market dynamics and also what we can expect from the Reserve Bank tomorrow, we are joined by Chantal Marx from FNB Wealth and Investment. Chantal, thank you so much for your time. How would you characterize market sentiment right now? And I suppose then, what is the market looking for in order for investors to jump back into, I suppose, an array of risk assets?
The market is extremely fearful at the moment. We can see that it's decidedly negative. There's a lot of stress at the moment about the US debt ceiling, as you mentioned in your introduction as well. And then there's also fears that Chinese recovery that we were expecting to offset weakness in developed markets isn't coming through as strongly as we would have liked. And then on top of that, this morning, we had UK inflation coming in higher than expected, which just tells us that inflation remains a problem, particularly in the developed world, and interest rates are likely to remain higher for longer. And I think that's kind of what's stressing markets out at the moment. In terms of a turning point, we obviously need some of the issues resolved. I think the US debt ceiling being resolved would be the first thing, or the easiest thing to get past. And then we need to start seeing proper movement on inflation in order for us to get some decent visibility in terms of when interest rate hikes might stop, could pause, and then eventually result in cuts, which will be supportive for the market.
Let's stay with the inflation theme. We've got SA inflation figures coming in earlier at an 11-month low. But I suppose, does that then not sway the Reserve Bank from moving away from 50 basis points? What are your expectations for tomorrow?
I think that's why you probably saw the rand come under a little bit of pressure after that release, because it's now widely anticipated that the central bank will hike by at least 50 basis points. And that follows this rand blowout, which has increased our risk of importing inflation in future. And of course, the Reserve Bank not only looks at what happened with inflation in the past, but what's expected to happen with inflation in the future. It's very difficult for them to pause when the rand has done what it's done. But I think that the Reserve Bank would have really liked to have kind of stayed on hold or maybe hiked just a little bit, like 25 basis points, to see what will happen over the next few months, because there's a bit of a delay in interest rate increases and the demand impact on the economy. But now their hand has kind of been forced. So we would expect a hike to come through, whether or not it's 25 basis points or 50 basis points, I think is up for debate at the moment.
Earlier on, Sens, we had results coming in from RFG as well as Nampak. Which of the two caught your attention?
Well, RFG caught my attention in a really good way. So even though volumes came under pressure, they managed to push through some decent price increases in the local business, which they call the regional business. The integration of their Today Pie acquisition has been bedded down quite nicely, and margins have improved, despite factors like load shedding playing a role on the operating cost line. The international business was also really well supported, even though last year they benefited from a failed peach crop in Greece. They didn't have that repeat this year, but demand for their goods remained quite decent. And we also had, of course, the weaker rand benefiting them as well.
Right. So before we let you go, I know there's some other aspects that I would have wanted to discuss, but what's your assessment of mid-cap SA Inc. stocks?
Yeah, I mean, RFG falls into that really nicely. I think they're extremely undervalued at the moment. So, especially towards the smaller end. So, when we look into SA Inc. generally, it's undervalued at the moment. I think a lot of negativity around South Africa and the impact of load shedding on growth coming through in those valuations. But really, they seem too beaten down to us at the moment. I mean, if you look at really quality mid-cap companies like RFG trading on like a 4 times forward PE, Master Drilling 5 times forward PE, and even your bigger companies like Fushini, Mr. Price, ShopRite trading at really depressed valuations, I think it offers opportunity at the moment. Of course, you'll have to kind of put your fear around what's happening near term towards the back of your mind when you're making that decision.
We were talking about UK inflation and I suppose also the SA side of things in terms of what it means for central banks. But let's take things stateside. When you look at how the market, is reading into the Fed presidents and the comments coming out of there, is the market running a bit ahead of itself when it comes to the timeline in which it expects the Fed to start easing?
There's so much debate around it at the moment. I think one of the debates is also when the recession is going to come. When are you going to start seeing proper pressure in the US economy? Because that would actually force the Fed's hand in terms of cuts. If the expectation is that a recession has already happened or we're in a recession right now, then the market could be correct. But the Fed themselves are actually a little bit more hawkish, and they don't expect rate cuts in the near term. So I guess it's again a situation where you are betting whether or not the market is right or the Fed is right. From our perspective, we think it's probably going to be a little bit later than what the market is pricing in at the moment. But eventually it will come, right? And I think that we need to think about it in those terms rather than exactly which point it will be. It's impossible to call right now.
All right, Chantal, thank you so much for your time. That is Chantal Marks from F&B Wealth and Investment. And as we mentioned, those two companies that we spoke about, RFG currently up 3.8% and Nambac up 13.6%. However, that is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.